So let's talk about BHEL, the capital goods space in general, with two important voices. Ravi Kr, ex-CMD of BHEL, joins us on the line from Nagpur. In a bit, also get in Sailesh Kanani of Angel to speak about his sense of what some of these stocks are trading at right now and the valuations thereof. Let's start off with this talk of a 19% import duty on power equipment imports. I mean, do you think, one, this is necessary, and two, whether or not it will have an impact? Because, you know, just interaction with a couple of Chinese companies indicated that they might actually not be hesitant to setting up the base in India to negate that effect.
Yeah, it is very good for the domestic manufacturers. See, there is already a rupee depreciation has taken place to the extent of about 10% at least. Even now it is at 49, 40 or whatever it is, you know, from 46. So there is going to be some positive. Definitely a custom duty will help domestic equipment manufacturers, and also it will help others. It is not domestic manufacturing. The manufacturing sector itself will improve because, you know, the technology will be available in the country, and also there will be more jobs created in the country. I think there is a necessity to put custom duty on this, so this will help the state domestic equipment manufacturers. They will set up JVs and all that. So to that extent, it will definitely help.
The other bit, Mr. Kumar, is how much do you think things have changed for some of the capital companies compared to what the scenario was over the last maybe 6 months ago? Because the stocks are on a bit of a tear. BHEL, the company that used to head some time ago, is clearly the stock over the last few sessions. And broadly, despite what the IP numbers are showing, the capital counters are pricing in a lot of positives to come in over the next couple of months at least, if not more. How much do you think the scenario has changed?
See, actually, you know, some positives have definitely happened in the last 1 month. See, one is the coal linkage up to 80%, you know, that from CIL, Coal India. That's one thing that is going to help. Secondly, the distribution reforms. There is going to be a tariff reduction from 1st April. I think every year 1st April is going to be mandatory for distribution reforms. The state sector order has been almost dried up actually in the last few months. So that, you know, once the distribution reforms comes, the state sector will be interested. Thirdly, you know, if there is an interest rate cut, then definitely the private sector will step in. And of course, the recent NTPC orders will be a boost for the capital goods industry, and a custom duty will definitely help the domestic equipment manufacturers. And there is still a huge demand-supply gap. If you see the negatives, of course, which has prevailed over now, is one is a fuel security, and second is high interest rates and low tariffs. And third is the poor financial health of distribution companies. They are not able to pay. And fourth is a land acquisition issues, actually. So these are the issues which has been negatives. I think in the last 1 month it has improved. I think from the third quarter of next year, the domestic companies will start receiving more orders.